Hey guys, Anthony Beckham here. Welcome to the channel where real estate is life. Today we're going to be talking about investing in real estate versus investing in the stock market, which is better and who it's better for, the pros and cons, and which one is going to make you more money. So let's hop right into it. Investing in real estate and investing in the stock market are both great ways to build your net worth. Both real estate and stocks have proven not to only be a great store of value, but to also go up in value over time. And if done correctly, both can be safe investments that can also make you millions of dollars. And depending on where you're at in life, how much time you have, how much money you have, I'm sure that one, either stocks or real estate, is gonna pop out to you as a clear winner. Barrier of entry. It only makes sense to start at the beginning. So which is easier, stocks or real estate? What is it like getting into real estate investing or investing in stocks? Starting with real estate, there are several ways to purchase your first investment property. One would be cash, and the second would be a loan. But because real estate is typically a rather expensive investment that holds a lot of value, most would need to get pre-approved before even getting started investing in real estate. This means you'll need to have a good credit score, which I made a video all about up here, so I won't get into too much detail in this video about how to build your credit score. But the bottom line is it will take you 6 to 12 months in most cases to have your credit score built up enough to be considered for a home loan. Most of the time, you're gonna need to save up at least 3% down for your first investment property, and potentially even more if you're not gonna be living in one of the units. While 3% doesn't sound like a lot, depending on where you live and what your median home values are, this could range anywhere from saving up $1,500 to saving up $15,000. Even once you find your first real estate deal, the process can take anywhere from 30 to 60 days, depending on what market you're in. Now, getting started investing in stocks, on the other hand, is a heck of a lot easier. You don't need to save up thousands of dollars to start investing. You don't need to have a good credit score. There are plenty of online brokerages that you can download and sign up online, like Fidelity, Ameritrade, Robinhood, or Webull, where there's a link down below in the description where you can get your very own Webull account and start claiming your free stocks. And there are stocks that cost as little as a penny. So the barrier to entry here is extremely low. Purchasing is extremely fast and happens almost instantaneously. It's really hard to argue anything other than the fact that stocks have real estate beat in this category. Leverage. Leverage is one of the biggest things that truly separates real estate from any other asset class. This is where things really get interesting. For most assets, you can't just go out and get a loan to buy hundreds of thousands of dollars worth of stocks or Bitcoin. Yet with real estate, just about anybody with a job, a decent credit score, and a small down payment can go out and borrow enough money to control an asset that it would take them decades or even a lifetime to save up for. This is one of the craziest and most beneficial things about real estate. The other crazy thing about leveraging real estate is that the government incentivizes us to buy real estate by keeping our interest rates extremely low. Right now, interest rates are under 3%, which is honestly around the same amount as inflation. The banks are borderline losing money, allowing us to borrow at this low of rates. The other cool thing is that these low rates are locked in for 30 years, meaning you'll have that low interest rate for the life of the loan. Interest rates go up, who cares? Yours is locked in. Interest rates go down, awesome. Well, now you can refinance your loan and your payment may be even cheaper. These are all the reasons why you often hear people refer to mortgage loans as good debt, because properly using leverage will allow you to make much greater returns and grow your real estate portfolio much quicker. When investing in stocks, most investors aren't just going to front you hundreds of thousands of dollars to invest like they would in real estate. You're gonna be working with your own capital when you're investing in stocks. You can only invest as much money as you have, which is going to severely limit you in comparison to real estate. Now, if we wanna get into the weeds, you can get margin loans on stocks, but these margin loans usually have variable interest. And the worst part is that the lender can literally call these notes due at any time and force you to sell your stocks just because they feel that your account is below their maintenance requirement. With real estate debt, even if the housing market tanked, the bank is not going to force you to sell your home. As long as you're making your payments, the bank's gonna take the money and allow you to wait out any temporary decrease in value. Because of all these things, real estate definitely wins the leverage argument. Returns. Now, this is an important one and one that we could get a little bit more in depth. Now, when we're talking about stocks, you're always gonna be paying whatever the market value is for the stock. It's not like you can find an individual seller who's willing to sell it to you at a discounted rate like you can with real estate. And because of this, it's a little bit harder to get deals on stocks. Really, the best thing that you could do is just buy during dips and in crashes in speculation that the values are gonna go back up. If we look at investing in the stock market over the last 50 years, we can see that the average when adjusted for inflation is right around a 7% return. Now, you only capture that 7% return when you sell your stocks, unless you're investing in dividend producing stocks. And when investing in dividend producing stocks, you can expect a 2 to 3% yield in most cases on top of the stock growth. There are stocks that offer more in terms of dividend yields, but they also may be higher risk stocks. One thing that makes the returns special on real estate is the fact that you can always find a deal. There's always gonna be someone somewhere who is selling their property at a discount, or say foreclosures or distressed properties that can be purchased for less than market value. For instance, I just bought a 12-acre property with 2 houses on it, and because the houses needed some work and there's also some squatters living in the property, the sellers wanted a quick solution, and I was able to buy the property for around $275,000, and it's likely worth $375,000, even in its current condition. The reason I was able to buy this property at such a big discount is because I'm solving a problem for the seller. And while I do have a lot of work cut out for me, because I bought the property in a distressed situation, I was able to add $100,000 or more to my net worth just by buying this asset. That's not quite as easy with stocks. You may say that where you live, there aren't any good deals, and maybe even if there are good deals, everything's too expensive or everything's so inflated. Now, that's okay, because the real estate market is extremely local and differs from town to town. Even if you feel that there's too much competition where you're at, or the properties are too expensive, there is always somewhere that is cheaper. Whether that's a couple cities away or a couple states away, I promise you there is always a real estate market somewhere that is undervalued. And in every market, there are deals to be had. And if you're in one of those competitive markets, good for you, because that means there must be a lot of money to be made, or else there wouldn't be so much competition. Another thing I like about the returns on real estate is that it's not only just a store of value that you're sitting around waiting for it to go up. Real estate was meant to be leased or rented out, meaning you're going to not only be making money from appreciation, but your tenants are gonna be paying you tons of money each and every month. And if you do it right, you'll have your insurance, your taxes, all your maintenance, all your repairs, and even the mortgage all being paid by your tenant with some money left over called cash flow for your own pocket. This is one of the biggest differences on the returns from real estate. And really, the return percentages have no limitations. The better deal you get, the better return you'll get. And the better you manage your property, the more cash flow you'll make. And every deal is different. I know investors that won't do a deal unless they're getting a 12 or even a 15% cash on cash return on their investment. And while this may seem like a lot or may not seem as achievable, it's a lot more achievable than you would think. Not to mention the fact that you can physically influence the value and returns by making improvements to your property because it is actual physical asset. This is what people who flip houses are doing. They're buying a distressed house at a discount that needs some work, they're fixing it up, and they're selling it at a profit. And this is because they are able to physically improve the asset and its value, which leads me into the next subject: control. Not to be the bearer of bad news, but stocks are an asset that you have no control over. Essentially, you're buying paper assets that show that you have a stake in a company. And this is not your company. You cannot make decisions for them. You have no say in the operations. You are simply an investor in someone else's business, and you benefit by making money when their business makes money. The only thing you have control over is which stocks you're gonna buy or sell and when you're gonna buy or sell them. Now, real estate, on the other hand, is a little bit different. Like you learned in the last segment, one of the biggest reasons you're able to get such good returns in real estate is because you have full control of the asset. Each time you buy a property and rent it out, that property becomes a small income-producing business that you're solely responsible for and in control of. Because of this control, you're able to directly influence the value of your asset by fixing it up or managing it better or increasing the income it produces. These are all things within your control. Passive versus active. But depending on how passive you want your investments to be, you may not need or value that control that real estate gives you. When investing in stocks, you're investing in someone else's business. And while that means you have no control, this also means, well, you don't have to do anything. Someone else is doing all the work. It's as simple as opening a brokerage account, putting the money in, and then just letting it sit there, which is usually the best strategy. Investing in stocks is something you could do today with little training or time, all by clicking the link down below for your free stocks with Webull. Because you don't have any involvement in the day-to-day operations of the business, investing in stocks long-term can be an extremely passive way of investing. Now, real estate, on the other hand, is a little bit more cumbersome of a process. The startup phase is going to take a lot of work up front. You're gonna start first by studying the market, then finding a real estate agent, finding a deal, working with inspectors, title companies, appraisers, lenders, agents, and contractors, most of the time all before you even own the property. Even if you found the house that you wanted to buy today, it would take around 45 days before you even own the property. And then of course, you still gotta find the tenant and then manage the property while it's occupied by the tenant. Which means you'll have tenants calling you to come fix their toilets at 2 a.m., right? Honestly, I don't know why I always hear that. First of all, hire a property manager. They're the ones that deal with those toilet calls at 2 a.m. Second, who in the hell is destroying their toilet at 2 a.m. to the point at which they need to call their landlord? While I often hear that worry, I don't think I've ever actually heard of a landlord going and fixing a toilet at 2 a.m. The property manager is gonna handle a lot of the day-to-day operations of the property, collecting rent, dealing with repair requests, and whatever other questions or concerns the tenant may have. A property manager basically protects you from having to deal with the tenants, and if a tenant leaves, they find a new one for you. And they do all of this for usually 8 to 10% of the gross rent, depending on where you live. But that doesn't change the fact that there's a lot of upfront work, and of course we still need to keep an eye on that property manager from time to time too. So I think it's safe to say that investing in stocks is certainly a more passive investment. Volatility. Now, one thing with stocks and their values is that they are very easily influenced. Stocks are a very volatile investment that can see huge 5 to 10% gains or losses in even a few minutes. And because of that lack of control, it may feel overwhelming to find that your Tesla stock is worth half of what it was yesterday because the almighty Elon Musk decided to smoke weed with Joe Rogan on the Joe Rogan podcast. It's the one and only Digo Double G. These are events that we literally have no control over as investors in the company. And news like Elon Musk smoking weed can easily affect your stock's value and even kill your portfolio all in a day's work. And while the stock market has a long-term 7% plus gain year over year, there are definitely going to be some bumps in the road along the way. Now, the real estate market, on the other hand, is much more stable. Home values historically aren't going to change from day to day. Residential property values are determined by comparable sales, and because transactions take, let's say, 45 days on average, and homes have to appraise similar to the values of the homes that have sold around it, the increase and decline of real estate values is usually a much slower process and something that you can see coming. Liquidity. If you need to sell your assets, stocks have a big advantage in the fact that you can usually sell your stocks within seconds at the press of a button, which means if you find out Justin Bieber is coming to town and you just spent your last dollar on a box of Twinkies, you can liquidate your stock super easy and go and buy some Bieber tickets. Now with real estate, as you've learned, it's not that easy. You're gonna have to list the property on the market. It could take anywhere from weeks to months to find a buyer that is willing to pay you the price you want. You have costly commissions to real estate agents, you have closing costs, title fees, and then 45 days after you have an accepted offer, after inspections, appraisals, and possible repairs, you can finally have your money. And by then, of course, Justin Bieber has likely already come and gone, and you've missed out. Real estate is not an asset that is quick to liquidate, and so we could definitely say stocks have the advantage on this one. As you can see, there are certainly pros and cons to investing in either asset class. And in my opinion, it all depends on where you are at in life and what you're interested in, as well as how much money you have to work with. For either asset class, you're gonna need to do a lot of studying and learning. Either get serious about it or don't do it. Otherwise, you're more likely to lose money than to make it. Whether you're studying income statements for companies you want to buy stocks in, or studying real estate negotiation or different markets, you're gonna need to put in a substantial amount of work to be able to invest at a high level. I obviously think that real estate is superior in many ways. As you know, real estate is life and all, but it depends on where you are at in life. If you are in a similar position to what I'm in, young in your career or business, trying to make your first million as quick as possible, you should be investing that money in yourself or in your own business, not investing that money in someone else's business who may or may not run it into the ground. Take the bull by the horns, take your fate into your own hands, and then multiply the money you have and then multiply it again. Not by chance of picking the right stock and hopefully your CEO says the right thing during next quarter's review, but instead investing in yourself and an asset that you can make money on the buy, then go and improve and make cash flow in the meantime, all while your tenants are paying off the loans for you. And all the while, your investments continue to grow. With the amount of control you have when investing in real estate, really the possibilities are endless. Now, if you already have millions of dollars, or if you're in a later stage of life where you don't want nor need to have an active role in maximizing your returns, there is certainly nothing wrong with investing in stocks. Again, it's a completely hands-off investment where you're buying shares of a company and sharing in the gains. You do nothing. And once you start to have a decent real estate portfolio built up, or stock portfolio, you should diversify your investments. You should have a percentage of your net worth in stocks, but you should also have a percentage of your assets in real estate. That way you aren't affected if one or the other goes down, or at least minimize by diversifying your investments. But for now, I'm tired of losing money on AMC. I honestly almost sold it and cut my losses, and then I just noticed today that it's going back up. So instead of watching my stocks go up and down, I'm just going to continue to add 6 figures or more to my real estate portfolio, every few months, and to my net worth, because that's the quickest way I found to do it. And that's how we are going to get you to that real estate millionaire status. So don't forget to slap around that like button a little bit for me, hit that subscribe button if you haven't already, and follow us on the journey to real estate millionaire. Thank you guys so much for watching, and I will see you on the next one. See ya.